Hello and welcome to CMC Markets and this quick preview of the week beginning the 27th of February. Now, in the absence of non-farm payrolls, which has been pushed out to the 10th of March from the 3rd of March, normally it's the first Friday of every month, but I'm guessing because we've got a short month in February, the data has been pushed back, as has the ADP, to the 8th of March. I think the key focus this week will be on a couple of inflation data points, namely the US CPE numbers, which is the Fed's preferred measure of inflation. Now, last week we got the latest Fed minutes and they didn't really add that much to the overall debate as to whether or not we were going to see a Fed rate rise in March. There still appears to be an awful lot of uncertainty about the timing of a Fed rate rise against a backdrop of uncertainty about the new US administration's fiscal plans. But ultimately, I think this is one of those times when the Fed just needs to get on with it. Ultimately, the economic picture in the US isn't likely to change over the course of the next 2 or 3 months. The expectation is we're going to get 2 or 3 Fed rate rises this year, irrespective of what Mr. Trump announced. So why not get the move out of the way, and then we can then focus on the glide path of the rate moves in the aftermath of any plans that Mr. Trump decides to announce when he addresses a joint session of Congress on the 28th of February. Certainly that timing would tie in nicely from his announcement of 2 or 3 weeks ago that he was going to announce some phenomenal plans on tax and that they would be big league. Well, Mr. Trump, the 28th of February is your time to deliver. Joint session of Congress, the eyes of the world will be upon you, and ultimately I think that's exactly the way you like it. Center of attention, announce your big fiscal plans. I can't help thinking that the markets are going to be disappointed. Ultimately, the direction of US data thus far has been fairly positive, and I think that the core PCE numbers that are due to come out later in the week are likely to paint a picture of slightly higher inflation. The last numbers came in at 1.7%. Markets are predicting an increase to 1.8%. Ultimately, the odds of a Fed rate move in March are currently priced in around between 30 and 35%. A decent number on the inflation print could push those odds up. Mr. Trump's speech to the US Congress could push those odds up. So I think it's going to be a big week for the dollar for this week, and it could also be a significant week for the euro as well, because we're going to get the latest flash EU CPI numbers for February. Now, we saw January inflation come in at 1.8%. I think there's a decent chance that the numbers that we see for the following month are likely to come in around about 1.9 or even hit the ECB's target of 2%. If inflation in the euro area starts to push above that 2% level, you can be absolutely certain that Mr. Draghi will find it very, very difficult to hold the line against some form of taper sometime this year. So EU CPI numbers going to be going to keep a key eye out for upward pressure in inflation there. Have a look at the US core PCE numbers, which is the Fed's preferred measure of inflation. Not to mention, obviously, the final iteration of US Q4 GDP, which is due to see an upward revision from 1.9 to 2.1%. I think more importantly also we're going to get a good snapshot of the UK economy in February with the latest manufacturing, construction and services PMIs for February. Have a quick look at the chart, bearing in mind that this is on a Thursday that I'm recording this. Certainly with respect to the pound against the dollar, we're still finding a decent area of support around about 124. Any dips below 124 continue to be well bought into. If we do break below that, then obviously the prospect of a move lower towards 122.5 is very much on the cards. But ultimately the pound continues to remain resilient, and there is the prospect that euro sterling could well test lower as long as we're able to stay below this 86 level here on this 4-hour chart, this pullback line and this series of moving averages here as well. So that's it for this week. Thanks very much for listening. This is Michael Hewson talking to you from CMC Markets.